PPC. It was established in 1892 and has 8 cement manufacturing facilities and 3 milling depots in South Africa, Botswana and Zimbabwe. It has more than 50% market share in South Africa. PPC also produces aggregates, metallurgical-grade lime, burnt dolomite and limestone. PPC has a market cap of 18 billion rand and a price-to-earnings ratio of 19. So, Paul, I'd like to start off with you because it's one of those stocks that you've held for a very long time. I know you lightened up somewhat.
Yeah, me and Sammy Marks in 1892. We invested at the same time. You know, we got the concession from Paul Kruger, and you know, it's been a long and arduous road, and we now are not at the all-time highs of the share price. No, seriously, I mean. And
you held through the tough times, Paul. I know because I've been interviewing you.
Look,
during
I must tell you,
times.
the 1920s were murder. Look, I mean, it's the largest player in the space.
Yeah.
It's obviously in the cement manufacturing industry. It's got great big plants, particularly out in Dwaalboom, which is near the old Ellisras, now known as Lephalale on the Botswana border. They basically build the plants where the limestone deposits are. They also have a big plant down in the Cape. And, you know, the market has obviously followed the physical development of South Africa as a modernizing nation. And that's been fabulous. It's had a strong position. Cement is obviously a relatively low value, relatively low margin, heavy thing, so you can't like compete with them easily. There's been competition issues, blah, blah, blah.
Yes.
Should you buy it now? Well, the trouble is it's not clear that we were all duped, I guess, in 2005, 2006, because things just looked so good, you know, the World Cup and all that, blah, blah. Do you buy it now? Well, it's a great dividend payer, and obviously it will do fine. But it looks a bit anemic at around the 30-odd rand level.
Absolutely, and it is a stock that has come under significant pressure in tandem with what we've seen in the overall sector. But one thing that could actually work against its favour, Janine, and correct me if I'm wrong, overcapacity within this industry as a whole in South Africa, still this is what we're seeing. And very old infrastructure, again, which perhaps is a negative for PPC. We know that they are doing a lot of maintenance, they are putting on a lot of new plants as well. Is this going to work in their favour down the line, or would you say it's still net negative?
I think if you look at the cement industry as a whole, we've seen 3 years of downturn and it's actually picked up quite significantly during January, February. Unfortunately, we can't see anything more because the Competition Commission has blocked that data release and has postponed it 3 months.
Exactly, so we don't actually know what's happening on the cement sales front.
But we've definitely seen that after the 3 year of continued downturn, there is an uptick, even if it's just bottoming out. So I think in terms of the market as a whole, there is still overcapacity, but there's a general trend towards leaning to more towards the positive side.
Okay, so aging plants, is that not a worry for you?
Aging plants, they are actually busy with a number of big projects to get their plants new up and running and not increase capacity that much, but increase efficiency. I think that's where the main thing comes in. It's not so much the old plants in terms of the running, it's being more environmentally friendly, which is gonna help them with their carbon points as well, and being run more efficiently, which is going to get the cost down.
You mentioned competition within the space.
Yes, because just understand the industry. There's PPC, then there's Lafarge, which basically bought the old Blue Circle business. That's a French-based conglomerate that owns stuff all around the world. And then there's the old Holderbank or Anglo Alpha business, which is totally owned now and is called AfriSam. And all of them have production facilities in slightly different places, and all of them have, you know, different part of the market, and all of them have a ready-mix type of profile and so on as well. I guess the real issue here is I'm not too concerned about the extra competition. I think there's a Chinese plant being bought in Brits. There's this Sepaku plant we'll talk about later. That's in Lichtenburg. That's in the western region of this, you know, industrial area. So, you know, the plants are old, but it's fine because cement's not very hard to make. You basically throw a whole lot of limestone.
The environmental factor, and I agree with
and
Janine,
a whole lot of coal in there.
Carbon footprint, Paul.
Yeah, no, that would be better if you could do it more efficiently. So they do that. But you get good dividends from them, and the building will resume. You know, if you talk about PPC, it's been through the cycle. I remember in the 1980s, they just finished the Dwaalboom plant and the market collapsed. They finished it, they mothballed it. So this is an industry that's prone to these kinds of cycles of investment. The only issue for you as an investor, are you prepared to be patient enough and own this thing for like 3 decades, in which case you'll get a good return?
Yeah, I know how patient you are, Paul. Janine, north of South Africa's border, and this is where we're seeing immense growth. In fact, there is not enough cement to cater for the infrastructure spent in Mozambique, a lot of it also going to Zimbabwe. Again, do you think that, I mean, in PPC starting to have its tentacles outside of South Africa, is that the key growth area that you'd be looking at with regards to PPC?
I think PPC went out last year and they said we want to expand north, but we want to keep the home fires burning. And I think 6 months later they came back and they said it's not so easy to expand north because of the resources and it being politically difficult to move into those countries and getting resources in excess of 30 years to actually make sure that it's a sustainable business. So yes, there is demand there. But I think that we are neglecting that everybody, all the construction companies, including the manufacturers, they want to move into Africa. And Africa is becoming, I think the margins will deteriorate as well, and it will become excess capacity as well. So moving cross-border is maybe not, such a profitable thing as we thought
PPC
originally.
Back to the 2006, 2007 levels, do you think that is likely? And again, this really depends on the overall construction industry.
That depends on if the market actually picks up, yes. The two things about PPC I think that stands out for me is that the dividend policy is being maintained because of the BEE a policy that is in place. And secondly, with AfriSam, I think that competition environment is going to change a lot, looking at AfriSam being so they're freeing up some cash which they used to pay interest payments on because of the high debt levels that they had. So that's giving them more marketability, and that's pretty much what you need in cement because it's a volumes game. So it's going to be interesting to see how the cement market evolves. It's not just about PPC and having the 50% market share anymore.
Okay, Paul has brought a gadget with to establish whether the stocks tonight are actually hot or whether they're not. And it's actually a very glam thermometer.
Yes. No, it's quite simple.
Okay,
it's
not
either
as
hot or
glam
not.
as I'm making it out to be. Okay, so tell me.
You press the button in the middle and it tells you. Hot or not.
Okay, Paul, I really expected something slightly more modern next time. So hot or not for you, PPC?
Look, I'm going to go with hot still because I think cement remains...
And this has got nothing to do with the fact that you own the company.
No, we own it already, as it said there in the disclosure thing. And I think the 50 Rand level where it traded at its high is certainly attainable. Because when the cycle turns, it turns, and there's a lot of cement that's sold in bags into rural areas. 50% of cement is still, in fact, sold in bags. So when it turns, it can really turn, and they're perfectly positioned in terms of the market. I concede Janine's points about AfriSam and everybody else, but at the end of the day, the real price point you've got to reach is how can you float the stuff in from China or somewhere else. So what's the import parity price? And I think the margins are still satisfactory. I am positive about the Africa thing. They've got a plant already in Bulawayo. They keep fighting with the Zimbabweans about, the ownership issue, so that's a concern. But I think it's probably one of those stocks that you want to be in, and it's on a 4.26% dividend yield anyway, so you get paid while you wait. So hot enough for me.
Hot for Paul and for you, Janine.
I am not so hot on PPC at the moment. I think we need to see more of a positive continued trend in infrastructure to really give that a boost.